Good morning, traders. Yes, you made it to the one, the only pre-market prep. Let's get this thing started. Hit that like.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders. How we doing? Yes, I know. In another suit. But guess what? Money Mitch is the name. You guys already know. Let's go ahead and bring on the brains to the show. Really, I mean, we got Dennis Dick, Joel Elconin. What's going on, guys?
What's up?
So, do you go with like the blue sport coat, the different shirts and different ties, or did you actually bring more than one sport coat?
Oh, more than one sport coat.
Wow.
Man. There, Joel.
Woo! Wow.
I'm just gonna call him.
I came prepared. I mean, do we need to a little?
Oh, he got the pants on.
Look at this guy. There's no jogging pants here. That's
the
brown.
The brown.
Brown is
everything.
in. I don't
Brown
understand.
belt.
That I see the brown with the blue. I'm
Styles.
not sure.
His new name is Styles.
You got to look like what you are, right? And I'm Money Mitch. So let's get this part started,
Styles, man.
All right.
I'm wearing Lions. Go Lions.
Wow.
Go Lions this weekend.
I got my American Pharaoh shirt on this morning.
Hey.
So I always wear a collared shirt. That's
always.
dressed up. Yeah,
Today is, guys. Today.
I had a little heart attack. I went to pick up my my suit at the cleaners, even though I didn't wear it to services, and the guy couldn't find it. I'm like, holy smack! So I'm like, oh god, I don't want to have to go buy another suit. But nope, I'm good.
Joe was getting the hand warm there.
Oh, he's a good guy. Chris is a good guy. S&P futures wild range. We dipped to 85.50, back up, down. Oh, I'll share the charts. Down only 2.25. Buy the dip. Works supreme once again. European ECB had a little bit to do with that. Yes. We'll talk about that in a second. Crude up 46 cents is 69.76. Trying to get back in the 70 handle. Gold battling 1800, up 840 at 1801.90. Silver up 26 cents at 24.32. Bitcoin trying to decide what to do here at 46K. We're down $85 at 46,435. And Ethereum, that's down $27.50 at 3508.75, recovering from that little sell-off. Before we get super involved, I don't know if Emily's listening, but happy 26th birthday to my daughter, Emily. Now,
happy birthday.
You guys look at me, and I know the chat is saying, how in the hell can that guy have a kid 26 years old? I know that's what y'all are saying.
Oh, yeah, for sure.
Especially the women out there. The women out there just, they're going, I don't know. Do we have any women robots in the chat? I don't know.
They're all robots. Remember, we found that out already. Do robots have a sex? I don't think they do, Joel.
And to celebrate Emily's birthday, I got up and I went swimming. 54 degrees outside. 54.
Cool mornings, Joel.
Yeah.
Are you done with the shorts? Is shorts officially hung up?
Oh, no, I'll still wear shorts until it's consistently under 60. You got to wear the shorts. I haven't even got the pants out of the closet yet. But needless to say, I didn't have a problem getting a lane at the pool this morning. And no one was pushing me out with that 54-degree weather. But
my question there would be, do you have some Lululemon?
Lululemon is coming out with some Michigan gear.
Hey,
yeah. So let's talk Lulu, boy. Street leading the wrong way into the report.
Yeah, definitely.
Why though? Because Lulu, don't they always beat? It seems like every quarter we talk about Lulu and the stock is gapping up. Maybe it's selective perception on my part, but I feel like this company always beats.
Well, let's
So
take a
I
look.
don't know who's selling ahead of the
Take a look,
report,
you
but
know.
they're dead wrong.
I know.
Give us those numbers, Money Mitch.
I think there's no better way than taking a look here on the chart. If you see here to the left, look at the surprises. And I'm going to put up my chart here so you guys can see Benzinga Pro. If you went to the calendar, this will show you it. Look, there's only about 2 or 3 reds there and about like 15 greens on these reports. So I think your analysis there, Dennis, was correct. Lululemon is trading higher after Q2 earnings beat there. Let's go ahead, and the numbers here is $1.65 per share, beat the estimate of $1.18. The sales were at 1.5 billion and beat a 1.33 billion estimate. So we're seeing it there, and I mean, your surprise says it right there, guys. So how the charts looking, Joel?
That's the hardest chart ever to read. You're gapping up above the all-time high.
Yep.
Yeah, this is called the all-time high. Let's see. The all-time high was just a few sessions ago at 417.85. You're at 429. I could call that support. I can see Made trading 418 today. On the upside, wow, they just jammed it after hours. The 4 a.m. traders couldn't get enough. If you need a potential resistance point, and I put a capital P on there, 434.49. That is your pre-market high. So projected range, 417 to 435. We'll see how close I am on that.
I like that projected range. That should be a regular thing for you, Joel. Projected range. We like that. We like those projected ranges. It gives us a feel for where the stock can go.
And I don't know what the heck to do with either. I guess I'd try and buy at 418 and sell at 435.
And I like my sympathy plays. So Nike, NKE getting a lift off of this, obviously up $2.64. Sometimes see some Under Armour lift here as well. Full disclosure, I do position in Under Armour. Got the one long, the one short. Yeah, so you're getting a lift in you, a little lift in UA, but a bigger lift in Nike. That is typical when Lululemon is going to be moving up 12%. So peer plays, just understand there's relationships there, and that's why Nike is up here this morning.
I still think I'm leaning a little bit more towards seeing that 418, just because everyone was selling into the report, right? And now the people that didn't sell, like, wow, I can still sell 7 points above the all-time high. So, and also whatever option traders, if you took a flyer on the 410s or something like that. So that's the way I'm leaning. We'll see what happens in today's action.
Also, keep your eyes on ASO today, also trading up, I believe, on that sympathy from Lulu. Let's go ahead and continue here. Let's go into RH, Restoration Homes, with a earnings smash.
I like that better, Restoration Homes. I like that better, actually. Maybe they should change the name. Obviously, Mitch meant Restoration Hardware. But you know what? He's right. Restoration Homes would be a better name for this because they try to restore all the furniture in your homes to make it look really old and antique-y. That's really what Restoration RH does. But okay, give us those numbers, Mitch. Sorry to interrupt. I like that, though.
No, I mean, agreed. I got to say it right here. Second quarter future 2021 sales growth of 39% year over year to 988 million, beating the analyst consensus of 975 billion. Their gross profit increased to 46.7% year over year to 487 million, with margins expanding 240 basis points to 49.3%. So definitely, I mean, you're seeing a good beat there. They lifted their future 2021 outlook, and you can see it. Good reaction there. We'll see if it can continue breaking through that monthly high there, that monthly chart standing out to me.
The Tesla of the furniture industry, Joel, because valuation has never made sense on this and has never mattered. Just continues to grind higher and grind higher and grind higher. I mean, you can't compare with Williams-Sonoma. Maybe we should have known they would beat after WSM beat. You look at this, it's kind of in the middle of nowhere. So this is coming up, lots of overhead supply. So unlike the Lululemon report where you've got a stock gapping up into an all-time high, this stock has all kinds of resistance everywhere. Where it stops, who knows? I think logically, $700, probably a logical stall out point. And obviously, I'm just looking at the pre-market chart now, not joking, and we see that little candle almost exactly at $700. So the market was reading my mind.
I couldn't get. I was 700 was just a psych level, so I couldn't, in all honesty, give you anything at 699. But I tell you, if I was an RH trader and this thing continues to rally, I don't think we're going to see this level today. But if this thing got up anywhere near 710, baby, it would be palms out. 3 highs in a row: 710.54, 712.05, and 711.68. I would just want to be early and get out there at 710. The fact that the early jump couldn't take you over 700 makes me think you won't see that today. Will you see the top of yesterday's range as potential support? Sure, why not? 673.72. That was the top of yesterday's range. And I just want to see what old Williams Sonoma did after that report, because I remember it kind of trading like 204 and I don't know. I don't know, Dash.
Williams Sonoma report was real good too. It filled the gap, came back down. It did not hold.
Now you're a buyer.
If you're using that for an indicator, Joel, which is how I trade, I mean, I will tell you the number one toolbox, the hammer in my toolbox is always relationships.
There
so
you go.
We do have precedence, and fantastic for you to note that. Williams Sonoma, obviously with the big blow away, but gave her back afterwards. So makes me a little hesitant to chase Restoration Hardware here.
Yeah, for sure. We haven't been chasing it, Dennis, since $49.
No, I know. Goldman upgraded it back at $35. I was like, what do they see in this thing? Now it's 700. Good job, Goldman. That's an unbelievable call.
I wonder what
That's
their
the best call ever. I don't know who that is.
What's their rating on that stock now?
I don't know if it's still buy or not, but I tell you, man, everybody hated Restoration Hardware 5-6 years ago when it was $35, and Goldman upgraded it, and it has never ever looked back. I think it was in 2016. Maybe it might have been 2017.
Raz like that one too.
Raz all over this. We got to give
Subscription
Jason
model.
Raznick some love. He's been long this thing forever as well. I'm not sure if he's still in or not, but he's had some great calls. The Raz, we're trying to get him back on the show, guys. We've been trying to hunt him down, actually. He's in hiding. It's sports season. This guy's living the dream right now. Or so. I don't know where he is. We never know what he's doing.
Where in the world is Jason Raznick?
Yeah, it's true, Mitch. Where
I'm
is
just
Jason
video.
Raznick?
We'll
We know he's
tomorrow.
He's got a busy life, man. He's doing a million things all the time.
I'm calling it right now. You guys hit the like for Jason because we're gonna get him on tomorrow. I wanted to do this also for as you can see, another kind of straight green. There's only one here where it was a surprise of minus 200%, but everything else was in the green there for the last reports on RH. This is what you kind of look at. I know Joel always talks about this. Look to see how the history has been for their earnings. And definitely
for long-term investing, man, you got to take a look at that.
Yeah, I know you always talk about that. Let's go ahead. We miss Raz too, Christy. That's why we're talking about him. That's without a doubt. Let's go ahead. Let's get into GameStop now. I know that some people were talking about GME. This Tom talking about the conference call here was a disaster. I mean, really, there's not much they can say right now.
It wasn't even a disaster. It was non-existent.
Yeah, it was just non-existent.
It was 5 minutes.
Yeah, so
they gave the numbers and said, we're not giving any guidance and we're not taking questions. Okay, then.
Confidence.
Later.
And confidence for the shareholders.
They don't need to. It's the people like the idea of not knowing what's going on because it gives them the potential. So they keep the shareholders in the dark just to keep the stock price elevated, I think. Anyways, we don't know. There was rumors yesterday, though, AMC GameStop going to do some type of relationship or some type of deal.
Some advertising deal, right, Mitch?
Is that what it is?
Put 25.
They're trying to put some advertisement there, do a little connection. It isn't really big, but one thing that they did say, and I'll read the numbers right quick. EPS was at 76 cents, misses at 66 cents estimate. Sales were at 1.18 billion, beat the 1.12 billion estimate. Not by much there, but the retailers say that it has invested in long-term growth initiatives during the quarter, including expanding its product catalog, enhancing its fulfillment network capabilities, technology, and adding talent across the organization. We know that they were looking for some NFT kind of employees, so maybe we get something out of that for NFTs. They also did enter into a lease of a new 530,000 square foot fulfillment center in Reno, but they even ended the quarter with 1.78 billion in cash, no long-term debt outside of the 47.5 million low interest rate that they got from the French government in the pandemic response. So at least from their strategy and what they're approaching, it doesn't look too bad there.
Well, they all got the cash because they were smart and they've been selling cash as the stock price has been inflated. You got to take advantage of that. AMC obviously was doing it as well. And I mean, that's the one good thing is, from this is that the companies have actually been able to raise cash to obviously, throw bankruptcy out the window here. And now they're trying to look to expand. So amazing that shareholders can save a stock. But in this case, in both, I believe AMC and GME, that is exactly what has occurred. To try to analyze where these stocks are going when they're completely disconnected from fundamentals is nearly impossible, but we can always do stuff on a technical. I mean, you've come down. It seems like GameStop dips get bought, though. It seems like AMC dips get bought. You try to get bearish these things. You think, oh, maybe it's reconnecting with fundamentals, and then they just get bought up again. So I've stopped trying to individually trade these things. Obviously, we know I like to trade GameStop and AMC together as a pair. GameStop, disappointing earnings. AMC is down in sympathy today. I guess the companies do have something to do together if they have an advertising deal, but they haven't, obviously, before yesterday had anything fundamental to do with each other. But they're both these two meme stocks that obviously have started this whole meme revolution. And these two stocks do trade together, and there is a relationship there. Sometimes it deviates, but and obviously the chart in the last week and a half has deviated substantially because GameStop's been selling off and AMC has not been selling off. But got to respect those relationships, and they have been holding here. Eventually, maybe that relationship breaks down. It has been breaking down, but I like to extract the alpha while the relationship appears to still be intact.
I just never want this stock to close above $347.51.
That's where you sold it, eh?
Yep.
You might be. There's two things that Joel is like the best trader. It's Bitcoin, because when he made like 100% in Bitcoin in like 6 days. He bought it like 7,000 and sold like 14,000 like 6 days later back in 2018.
Should have bought it back.
You were good at that. And then the GME. Where did you buy GME?
It was single digits.
You bought it in single digits and sold at $351. Man, why are you still doing this show?
Because it wasn't a big enough position.
It wasn't a big enough position.
340.
Put all the eggs in that basket.
347.51, and now it was a fight to sell it that day. And the next morning, when it traded 483,
didn't want to sell it.
Nope, she didn't want to sell it. She did not want to sell it.
Joel.
And I'm like, well, I was sick of talking about it on the show. That was the main thing. But this is a tough chart. And so if we have any Reddit people in here, let me know where you're going to buy it, because the next daily low I see is 165.15. I don't think we're going there today. That's another $15 away. If you feel you need to get down and dirty and you need a level to lean on, pre-market low is 177. You could take a shot there, see what happens, get stopped out. But that's all I have, 177. Then I have that daily. That's a big candle that it had on the way up. So, go up quickly through a big candle, come down quickly through a big candle. Haven't looked at AMC in a while. I know I'm not going to the movie theater anytime soon, but hey, who needs?
Why not? Why aren't you going to the movie theater? Tell me.
I don't know. Well, first of all, are there any good movies out?
Mitch, or chat, we'll throw that to you because I have no idea.
I don't think so. At least the ones that I wanted to watch, I was able to watch on HBO. I have HBO Max, so.
You know what I am doing now, and I haven't made an official decision yet, but that I sat out the first Michigan home game. Thinking of going to this. Yeah. It's
Go Blue.
Saturday night game.
You couldn't resist now.
Mitch, do you want to stick around until Saturday night? I got an extra ticket for you.
Ooh, that is tempting. I'm gonna have to push that flight back. We'll see what we can do. Okay. Let's go ahead and let's get into one more topic here. I know that Dennis, you might want to talk a little bit more about this. What's going on with the ECB this morning?
Yeah,
how is it affecting the market? I know you probably explained this better, but
well, interesting enough that it actually looks like they're tapering. That's how I read that headline.
That's the way I read it too.
I read it in like 10 seconds. So let's just bring up the actual headline there. Do you have it in front of you?
Yeah, I have some headlines here. there's no exact one, but here's
I got it in front of me if you don't.
You got it. Go ahead. If you want
so ECB announces their monetary policy decisions. This came out at 7:45. It is the reason for the rally off of the lows, because if you look at the S&P charts, and Joel, bring that up right now, you'll see a significant rally at 7:45. And this is because of the ECB. Based on a joint assessment of financing conditions and the inflation outlook, the Governing Council judges that favorable financing conditions can be maintained with a moderately lower pace of net asset purchases under the Pandemic Emergency Purchases Program, PEPP, than in the previous 2 quarters. So basically, it looks to me like they're doing some tapering. So, wow, they beat the Fed to that. Interest rates on the main refinancing operations and interest rates on the marginal lending facility and the deposit facility remain unchanged at 0.00, 0.025, and minus 0.5% respectively. So talk about negative interest rates. There they are over there in Europe. So interest rates remain unchanged, but looks like they're doing a little bit of tapering. And you know what? Maybe in this case, this is something the Fed takes note of, that actually the market responded favorably. And maybe this was expected, and we know it's all about expectations. So I don't follow what's happening with European monetary policy, so I cannot tell you what was expected. But they're responding well to a little bit of less asset purchases this morning.
Yeah, inflation already rose to 3% in August. So I think that was another thing that they were focusing on. They kept seeing the raise of inflation going past.
It's a major issue.
So
everybody who's saying, that this is just transitory, I do not agree with. And I think you're getting a lot of CEOs coming out lately. We've obviously just had Sherwin-Williams saying they don't agree with it either. And we had the Campbell's,
Pulte Homes
company,
too.
Pulte Homes. There's been just a number of companies, the major companies that have difficulty passing it through, that have been complaining about inflation. If you're Kathy Wood and you're looking at technology, is there inflation technology? Not really. We know prices of computers have come down, if you want to get very, very basic. But, there is deflationary pressures in technology. So if you've got your blinders on, you're just looking at tech stocks, you think, oh yeah, I'm seeing deflation. But if you take those blinders off and look at the rest of the world, maybe there's a little bit of deflation in some tech stocks. I tell you, in the rest of the world, it's not deflation. We got major inflation across a number of different sectors. So Kathy Wood with the blinders on, talking deflation and taking it to the entire, and taking it to, the entire economy, when really it's just deflationary pressures in tech. So overall, inflation's a major issue. That's why I still, even on the pullback, I bought some lumber stocks a few weeks ago. I wouldn't even mind some steel stocks here, because I don't think, and steel, just to speak about that, has come off substantially. I still own my Nucor, but I sold my X. I had Cleveland Cliffs at one time. I sold that too. So, maybe it's a time, if you start to get a pullback in some of these sectors, I still think inflation is not going away.
I mean, you can go look at the Coke prices. I don't think it's going away, man.
No, you go there, and like I said, my friend or friend of a friend has got the restaurants at chicken wings, bag of chicken wings for his restaurant, $100 a bag last year. Now he's pushing $220 for the same bag of chicken wings. But there's no inflation. That's hard to pass through. That puts pressure on the restaurants. Think about how much pressure, small business in the restaurants as well. Like you've got, obviously wage inflation going to be happening, because you can't have, be paying somebody $8 or $10 or $12 an hour and expect them to be able to, survive in this world. It's very difficult here at $12 an hour. In some places it's less than that. So you've got wage inflation coming up and hitting these small businesses. You've got consumer, inputs that are going in here, like the chicken wings hitting them. And then you've got, so what do you got to do? You got to pass it through. You got to raise your prices at your restaurant. Kramer said he raised his, in his little bar that he's got there. He raised his beer prices or his drink prices from like $6 to $9. I mean, what are you going to do? What are you going to do? And we saw the squeezing of Sam even. I didn't look, but this is another story. Maybe it's a good segue. I did not read. They gave some guidance yesterday, and it's not good. SAM, Boston Beer, which has just been in the gutter and continues to get wrecked, now falls another 9%. Is this capitulation? Who knows? But there's, a lot of other issues with SAM as well. We talked about the microbreweries coming in, and that doesn't help the big makers of beer and spirits. But I mean, you look here and you think, wow, This stock was $1,300 at an all-time high back in April. It is now $500. It's down 65% from the highs. Obviously, not every stock you're looking at or every company you're looking at is in this raging bull market.
No, not at all. Pre-market low 500 right on the kisser. What do you got on the monthly lows? 498.29. If you've been waiting to buy the stock since June of last year, there's a level for you. 498.29. That's right with the 500. Wow, this reminds me of the stomps.com chart. Remember when going back? That
was a good buy. Are you saying you want to get down and dirty in some sand?
I said it looks like it.
I know. I said, like somebody just said, capitulation, big word. I'm like, maybe capitulation.
You could have thought that
maybe
before.
being the key word.
Yeah, where did that stop?
We're trying to read the guidance. Are they talking about why?
They withdrew guidance, I think.
Industry reports have estimated the full year 2021 volume for the hard seltzer market retail sales will have over 100 million fewer cases than the volumes estimated in May 2021. Yikes! And they're, they're getting hit with don't kid yourself. They're getting hit with the slower reopening. I mean, yes, some people are telling me the Disney World is packed, but I'm telling you, there is a hesitancy that we did not think was going to happen before Delta emerged. So get rid of Delta. Maybe some of these other companies, the spirits makers, the beer makers, maybe start to rebound. But these are reopening stocks. And the reopening trade has been hit hard. Don't look any further than the airlines. You can see what they've done as well here in the last 3 months. And they've been straight down. So reopening, you got to take your stocks. When you're looking at buying a stock, classify it. Is this a reopening play? That's the first classification, really, in this market you want to do. Is it a reopening play? Is it a stay-at-home play? Or is it a hybrid? Or is it none of those? So if it's a reopening play, you put all those stocks together because they all move together. People keep asking me, why is GM and Ford keep getting hit? Those are really reopening stocks, though. Yes, they have the EV revolution going on in them. Yes, they are going to be major EV players, but they are reopening stocks at their core, and you are not seeing, the big reopening that we once thought. But you might see it, though. I'm not saying I think it's just delayed. I think you're going to eventually get a good reopening. But the pure reopening stocks, the airlines, the cruise lines, the casinos, those have been hammered. I got hit hard in Las Vegas Sands. I ate half the loss here because in consolidation station here around 44. I got half my losses back, and I said, thank you. Sometimes you got to cut your losers. I'm still in a little piece of it. Penn Gaming has come back nicely, but it also has a sports betting aspect of it. So I don't know, Joel. What are your thoughts here? Let's go back to Sam.
Summer? No, Sam. I could get
Summer
you
of Sam.
That
was
pre-market low. That was it. No,
I don't think I saw it though.
That was a killer.
Oh, okay. Well, it wasn't a good movie.
Yeah, don't mention that.
Well, I was just mentioning the movie, not that the killer was good.
Okay.
Actually, I didn't know anything about what the movie was, to be honest with you.
A couple things. One. And I see it written about just a little bit, but the summer was supposed to be good. The summer was supposed to be people are supposed to be outside, and we were supposed to have a reversal of the trend and worry about the fall and the winter. So so the summer you can't say with the cases and the variants actually been good. So that's a huge negative, and I think that it hasn't been getting the headlines as much, but I think that's it. As far as this Boston beer, Sam's, not a huge beer drinker. Never. I don't know if I've ever had any of Boston beer, but pre-market low 498.50.
They've got some big brands though.
If you want to take a stab here, the other thing I just wanted to mention, and I didn't get a chance to at the top of the show. You're saying the ECB, you're saying this or whatever, but you know what? It's rollover, folks. And you always get this kind of choppy action during rollover. I mean, you got air pockets, people that are, working out of the SEP, getting into the Ds, reversing their positions. Some guys are just coming in, doing it all at once, 500 at the market SEP, 500 in the market Ds. There's other more crafty players that try and actual work to spread. So this is the first day of the December contract. I'm still going to be doing SPOO numbers. I'll do SPOO numbers for SEP today and tomorrow. Monday, I'll transition to the Ds. And then next Friday, we have the quad witch. And I mentioned this, I can't remember who I was talking to about this yesterday. I know some traders on the floor that would not step on the floor during rollover from the Tuesday, because Wednesday was the last day of the SEP, until after the quad witch. They said, you know what? I just, they didn't like the market. They didn't like the flow of it. So this is typical action that you see on a rollover. So whatever, ECB earnings, yada, 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 Bitcoin, this is repeatable trading action. And just based on that, I'm looking us up. We traded down to 85.50. We're only down 5.5 handles now. If we can't get this thing green, if we can't get to 12, what was it close? 12.50. I think they're going to spank this market again. We got to get green, and we got to hold green, or else I don't know if we'll get down to that pre-market low, but I think it's really important for the market to get green after this, back and forth activity.
I wish you could see my screen. And I have a number, a large number, like 150 of the S&P 500 components.
And none of them are up.
Hardly any. I'm scrambling around trying to find something green. Nike is green, obviously, because we know that's from Lululemon. But you're just looking around here, and it's a lot of stocks in the red. And you think, how in the hell did they almost take this SPY green when they got this many stocks trading in the red? And what, and obviously when you get into after 9:30, you have the high frequency arbitrage traders that come in and bring it all in. So you get to 9:35 and it's all, figured out, and the market is where the market wants to be. Pre-market, they're still figuring out. You got half the S&P 500 companies that probably even have maybe not even had a trade this morning. So there's a lot of, figuring that's going out into this. But, what I try to do, and I'm giving away strategies here, but I try to look at stuff like that. And I often do make money just by looking and saying, hey, I see a hell of a lot of red. All of a sudden we get a huge whipsaw move higher in S&P. Are the stocks playing catch up here? Or are the S&P futures, maybe just overshot? And if you're seeing a hell of a lot of red still, maybe it's a time to maybe put a short on SPY when they get up near that flat. And that would have been the case this morning, because now you're starting to leak here a little bit, because we almost got flat there, Joel, when we started the show around 8 o'clock.
Okay, and just real quickly, someone asked the rollover in the futures contracts, and that the futures contracts for like the S&Ps and a lot of the financials trade March, June, September, and December. They're quarterly contracts. So when it comes to the expiration, if you want to keep your long SPOO position, right, it expires next Friday, you have to close out the nearest expiring contract and then initiate a similar position in a forward month contract. So conversely, if you're long to September, you want to stay long September, you have to sell September and buy the December. So that's if you opt to roll over. It happens. Like I said, it happens. A lot of people, I'm going to wait to the quad witch day. Excuse me, most of the big traders in the futures do the rollover. And that's why crude is so darn hard to trade. It's because they roll over every month. And it's like, you do doing levels in that is, just hitting your head against the wall, because every month, and there's like some big disparities in it, the contango or the backwardation. But I just wanted to explain the rollover, and the rollover leads to the quad witch expiration, which should be an interesting one next Friday.
1 minute.
All right.
The guests can come on here. Just quick thoughts. Just looking here. Like I said, sometimes you can look at what's trading red. A better indicator that I use in the morning is looking at the pre-market imbalances. And, on a day that we have option expiration, they don't mean as much because they're wild. But on a day that there's really not as much happening, the pre-market imbalances give you a pretty good feel. And they are all mostly not huge, but decidedly to the red. And I'm looking at Pfizer with 167,000 to sell. Again, if you're new to imbalances, we've explained this on the show before, but if you're new to the show, the pre-market imbalances for New York Stock Exchange stocks come out at 8 o'clock. And what that is doing is giving you an indication for the opening. When I see Pfizer with 167,000 to sell, what that is telling me is that relative to the close, there's 167,000 more shares to sell than buy. The projected opening right now on that stock is 46.20 with that volume. Institution comes in, says buy 200,000 shares at 47. That selling balance will flip to buy. So obviously it's a moving target until the stock's physically open, but it gives you an idea of where the buyers and sellers are positioning themselves for the open. Coke 76,000 to sell, JP Morgan 55,000 to sell, IBM 47,000 to sell, General Motors 58,000 to sell. Yes, I'm cherry picking some sell ones, but I'll tell you, looking at my screen, I don't see a hell of a lot of buy ones. I do see one in Visa 24,000 to buy, but for the most part, it's looking like a red open.
Yeah, we'll definitely be looking at it. One thing I've been mentioning is, of course, the seasonality of September coming into play here. And also, one of the things is when you're having that look, right, the seasonality that normally there's pullbacks in September, and also you're getting the SPY at the top of the range looking like it wants to come back down. I think this is just one of those kind of weeks where everyone's kind of expecting almost a pullback. And with that being said, I don't see too many investors just jumping into longs right now. So we'll see what happens with the overall market. But well, let's go ahead. Let's get to our guest, Jeremy. I see Jeremy out there. He's ready. Let's go ahead and get him on here. We got Jeremy Schwartz from the Director of Research at WisdomTree. Let's go ahead and bring him on. How we doing today, Jeremy?
Hi, Mitch. Hi, Dennis. Joel. Good to talk to you.
It's good to have you on. I know you've probably been hearing a little bit about our talk about the market. So do you have any opinions about what we've been talking about already?
Yeah, I like what Dennis was saying earlier on everything is really a reopening trade or not. I think so much of the market is dominated by that work from home versus stay at home. We saw that a lot last year. I think, certainly right now we're competing with Christine Lagarde on her press conference on taper talk from the ECB. I think one of our house views, I've worked with Jeremy Siegel at Penn Wharton for 20 years, and we've been talking about the taper coming to the U.S. Yes, we had a weak jobs report last time, but the underlying inflation data we think is running very hot and not going to slow down. So I think that's partly what you're seeing from the ECB is also signaling that some of this stuff is not so temporary, that there's going to be longer lasting supply issues and some of these inflation pressures are with us. And so we have our eyes on the CPI, the PPI this month as those being really key numbers for the Fed, and that taper talk likely, it wouldn't surprise us to see the Fed actually taper in September.
September?
Yeah, I mean we've been aggressive out there. I mean that's certainly not market consensus at all, and so that's where we have an outlier view. And that could. If it is true, there would be more volatility in the market as the market adjusted to that.
The Fed must look here, at this morning and seeing the ECB doing some tapering and seeing the market respond favorably to it, at least initially here. We actually had a rally off of this and thinking, well, maybe if we do pull, or we do back it off a little bit, the markets just don't turn around and crash.
They started doing all these bond buys when we were in an extraordinary circumstances. Yields, there was a lot of issues. I mean, we are not in that same extraordinary circumstances that we were. So they do need to eventually get off this, what they would be real extraordinary accommodation. You could say, is the mortgage market really need the Fed support today? You have home prices all-time highs and going gangbusters. Really, does the mortgage market need that? So there is going to be a growing call, we think, within the Fed. I mean, obviously, get headlines like today. There was somebody who said at the Fed that the Delta variant concerns perhaps doesn't make September in play. But we still think those inflation numbers are going to come in hot, and that may actually force their hand.
Give me a sector that maybe hasn't performed well. That's not a reopening stock. Is not a stay-at-home stock that that may perform well in an inflationary environment.
Well, gold. Gold is that's been one of the surprises. I think some of the demand there. I mean, we've got a number of combination factors of gold selling off this year. You had the Bitcoin ascension stealing some of the demand. You have rising rates stealing. You had all these negative yielding bonds and people were buying gold because it had a zero carry instead of a negative carry in Europe. That might be one area that's been an underperformer. I think the key sector that we're watching heavily, and it's surprising you haven't seen outflows. People are buying the dip in China tech. if you look at the flows to China, those big tech stocks, like the China internet ETFs have seen a lot of inflows. We have a fund, CXSE, which is China without the state-owned enterprises.
Give us a symbol again.
CXSE is China ex state-owned.
Gotcha.
So I think that's one that's, if you look at performance, it's come down this year. It's one of the few places that's negative. And, the fundamentals are actually, these companies are still growing. There's just this huge uncertainty over what is China doing to these companies.
Yeah.
And surprisingly, the investors are actually still buying it.
I mean, you look at a company like Alibaba and you think, wow, if you're comparing it to, valuations around the world, you think, wow, this thing's trading 15 times, forward projected earnings. It's growing like crazy. It's growth at a reasonable price, to the extreme, like one of the best GARP stocks out there. But then I look and I'm like, well, I have a small piece, but why don't I add to it? Because I don't know what China's going to do to this company. So the political risk keeps me out. But, I look at the fundamentals of the company. I think, wow, eventually this company's going to come back. But, maybe it's not the case if China keeps picking on them.
Right. I mean, that's why you get these valuation discounts, is because there's an uncertainty. And so people have been selling those stocks in a big way. You saw a headline from Ant, like Fidelity marked down their Ant valuation, which is tied to that Alibaba decline, right? There was talks that the IPO was going to be a $250 billion company, and Fidelity just marked it at $78 billion. And so that's the big slowdown that's impacting, that started this sell-off in tech, was the Ant news.
Yeah,
and it sort of it's gone on. I mean, we would say, we're more on the long-term camp of that people are overreacting to some of this. I mean, it's a natural reaction that when there's a lot of uncertainty, there's no question there's uncertainty, and people hit sell immediately and then they ask questions later. But these companies are they at the end of the day, your point is very strong, that the fundamentals are growing. They're still going to be really, they're some of the largest employers in China. They don't want to kill these companies. They're just trying to rein in what they saw. They're trying to do some rebalancing. One of the covered stories, that the education companies, we followed that, were down like 90% because an education minister basically made them nonprofits. And that guy got fired. People aren't paying attention to that story, but China wasn't happy with what happened to those education stocks.
Can you give us a couple of those stocks? Are you talking like the EDUs and
TAL,
TAL,
and a few of those were another place where it really did get hit, and sentiment turned negative after that education area came under fire.
Wow, TAL. And we look at this one and just bringing up the chart here, Joel. This was at the beginning of 2020, it's $89. It's $5 now.
What?
TAL.
Oh. What's the symbol?
TAL.
Oh,
I trade these.
that one.
TAL.
Yeah.
I mean, these things have just been assassinated. So do you think now that the guy got fired, that there's a potential here that, not that this is going back to $80 anytime soon, but the potential that maybe the bottom is in?
Well, I think this is one of those regulatory uncertainties, like how are they going to make money? I mean, they basically came in and said, part of the background on these education companies was, it's very hard. It's not like the U.S. education system where everybody goes from high school to college. There's, maybe half the people will get from one level to the next level, and then another half, can go to the further on. So people were spending so much money to get their kids to prepare to go these levels. So these education companies had huge businesses to keep preparing people to go further along the curve. And it's preventing some of the China's long-run goals of actually getting population growth. People are, not having kids because it's so expensive to get them. And, so that there was this high-level talk about, hey, we need to make this more reasonable for people to have kids. So it was going against China's longer-term strategic plans, but they definitely were not happy with how it all happened. And so we have a China member, Li Chen-Ren. She's become our from China, has 20 family members in China. And so we get a lot of the on-the-ground insights from her. And so she's talking a lot about this, that people are not focusing on that. They weren't happy with what happened in that sector. I don't think they're going to go back to where they were because they have changed the fundamentals in some way. But certainly, there is some overreaction to how that's spread across the rest of the group.
We're on the line with Jeremy Schwartz. He's the global head of research at Wisdom ETFs. Jeremy, recently you discussed the biology revolution in develops in genomics, and you're going way beyond the healthcare applications. You're talking about how we grow food, agriculture, energy, and data storage. What are ways to capitalize on that upcoming trend?
Yeah, I love that ETF. WDNA is the ticker there. So it's only a few months old, but this competes with the way people have traditionally done this type of idea is in like the biotech and the genomics focused funds. This is crossing the line to like what you said, that it's way more than just healthcare. That we all are very well versed in the mRNA vaccines. We all are getting the vaccines. And we see how fast that technology came together. Whereas, what you don't see is some of these private companies in agriculture that are growing fish, that are growing meat out of a lab. Like how we eat is going to radically change. I mean, just even the environmental pressures from that, how much better it can be from these developments in biology revolution. It's going to change how we store data. Like if you think about they're getting fossils that have 1 million years worth of data from DNA storage. Whereas you think about if your iPhone, you think you're going to have, if they dug up your iPhone, you think that's going to be around 1 million years later? It's just fundamentally different what DNA can store. So even data storage is going to be an area that gets changed with this biology revolution. Energy is another place where they're doing a lot of interesting advances. So yeah, this is a brand new fund. We're working with Jamie Metzel, who's on the WHO Genome Editing Standards Commission. He wrote a book, Hacking Darwin, which is where we first learned about him and sort of partnered with him to create this basket of innovative companies.
All right, before we let you go, I was wondering if you could do me one favor.
Uh-oh.
Sure.
Uh-oh.
Okay. So, love the name Jeremy, right? Jeremy Schwartz. We have you on. You're a great guest. And you're tight with Jeremy Siegel, right?
Yes, sir.
Okay. So, would it be possible to get Jeremy Schwartz, Jeremy Siegel, and then I'm going to get Jeremy Newsom, who's one of our
Jeremy
favorite.
Show.
Yeah, a Jeremy show.
Let's work on it.
Can we work on that? You think that might be a possibility? Because I mean, you give us great insights into the markets. Fundamentally, we need this on the show to look at things. We like to look at technicals, but a lot of the fundamentals move the markets. Jeremy Siegel's been around for longer than me, believe it or not. And I like that Jeremy Newsom is just a great guy, an upcoming trader. So I'll send you an email and hopefully we can arrange that by the end of the year.
I would love it.
The Jeremy Show. Thanks, Jeremy.
Appreciate it.
All right. S&Ps they're trying, Dennis. They're only down 4 1/4. Yeah. They're trying to hit it. This could be one of the, we're pretty close to the upper part of the range. So I don't want to say the range for the day is in, but because we're only 4 points off the high. But right there with that to close, man, can the Bulls do it? Can the Bulls get us green on the session? If they do, I will be very impressed.
I don't know. You got to show me the chart. So show me that SPY chart there because I'm still looking at the WisdomTree
I'll go
chart.
SPY. I'll go SPY for you.
Yeah. Well, we like SPY. I don't like paying.
I spy with my little eyes.
I don't have to do fancy adjustments on the roll on SPY. I do have to do the dividend adjustment though, so there is adjustments there too.
Yeah, that's only
4 times a year.
There you go. What do you think?
I think we're just going to be in a chop fest here. I think yesterday's low. I think yesterday's low is safe, at least at this point in time. I think we're going to chop around. Maybe we even have an inside day, Joel. Maybe we even have an inside day.
Oh, an inside day for sure.
Oh, Joel's calling inside day for sure.
No,
nothing's ever for sure.
Nothing's for sure. Well, because yesterday, if the real high, the real traders, 24.75 was the high. And I just think, even if you do get green, it's going to be like chunk. Like offers, boom, people trying to get out of the SEP to buy the Ds. But the inside day is a good call on that. I look at that 1250. I mean, it's close. The Bulls are trying, just not giving up.
I did find one green stock here, thanks to Christian Fromhertz, just tweeting it out because I did not notice this. Peloton, PTON, launching their own apparel line here. Joel, you're still a Peloton shareholder. Maybe this turns them around. Maybe
No,
they see the
I hate
success
that
that
stock.
Lululemon. Stop and hear me out. Maybe they hear the success that Lululemon is having, and they're like, "Hey, we're going to launch our own apparel line here too." They're trying to get away from being the one-trick pony, and they really are just a one-trick pony. So moving away, I like this move. I actually like this move in Peloton. I still hate the valuation. I doubt I'm coming into the stock at these prices, but I will tell you one thing. I mean, moving into apparel, the Peloton yoga pants. I mean, I get it. I don't know what the apparel is all about. I haven't seen the details yet, but smart move. Smart move.
Cutting prices, Dennis. They're cutting prices.
No, I know. That's why the stock's been coming down.
Yeah, that's
and that's why they're moving into apparel, because they got to justify this valuation somehow. And when, obviously we always talk about that value gap, when you've got the growth stocks the growth starts to slow, and the value stocks sitting down there, the value investors looking at Peloton saying, I'll pay $20 for it, but not paying 100. You got to figure out a different way. So I like that they're doing this. Is this turn around the company? Does this turn around the stock?
No.
I don't know. How big can Peloton, can it compete, on the apparel? Maybe. It's got a name, maybe, but, it's not Lululemon, I'll tell you that.
One of the things is also, the story here is starting to change. On Friday, they released a headline that their app usage had fallen 42%. So
that's not a good sign.
Not a good sign. And one of the things the only thing I could point to the upside is that you're going into winter, right? That's when you're going to start seeing some more Pelotons get bought, because no one wants to go outside and work out in the winter months. So I think that could give it a lift going into it. I'm not so sure. We don't have that much historic perspective on Peloton, but I think one of the things is you're starting to see them innovate, like you said, Dennis. Try to get into different areas to keep hitting that bottom line, making their revenues, hitting their estimates. I think you're going to continue to see them. One of the things that Peloton did in the pandemic is they tried to change their name to not just it's a bike stock. No, it's a personal trainer app. And so essentially you can get whatever you want. If you want to do yoga, you can do it on Peloton.
Yeah.
And I think that's really the where it's going, Joel.
Sorry, man.
It's not the bike. It's not the bike, man.
Joel talking against Lisa's book here.
Yeah,
he's been trying to sell this thing since like $50.
You know what? I had a choice this morning of going and swimming outside at 54-degree weather. And I'm like, well, I can do the Peloton. I'm like, you know what? I'm going swimming. I don't know. It served its purpose. We bought it in December of 19. So I'm so glad we had it. I just, the injury thing is still, wavering. When companies are like cutting prices and venturing into other areas, to me that's bad. To me,
reeks of a little desperation.
Yeah, I think it's a desperation play. I seriously. Oh, we do have an area where I wanted to sell this if it was originally breached, and now it's a potential sell area. 130. This thing ain't going back to 130.
Well, I'm going to give you the double bottom from the last 2 days, taken right from the Joel Elconin textbook of technical analysis. Perfect double bottom from 2 days ago, 96.055, and then yesterday, 96.06. I love it when you get two lows that close to each other, because I do believe technicians, at least like Joel Elconin, look at these things. And you are getting a positive headline. It's being viewed as positively, at least for now. So if you are buying this on this Peloton headline, you absolutely do not want to see it take out that double bottom low of 96.06. So I would say you can come in here and buy it, and you're risking yourselves about $2.50 because it's 98.60 right now. But if I was long it, I would stop myself out the 96.06 low.
And the last time you gave that kind of setup, it wasn't a double bottom, but it was a pullback in the Bobster. And
it worked.
Yeah, and it did. It actually
yeah.
It came
and
down.
I like the pullback in the Bobster today.
We're gone green, folks.
Green on the screen. There's a few stocks trying to go green, but I'll tell you, there's some work to do on those stocks to keep this S&P futures trading green like this. Yeah. There's some work here yet. But I like the Bobster pullback here this morning. Again, I've said I think the 152 low. I mean, it's looking hindsight capital's 2020 always, but I think the 152 is your low of the year in Bobster. I don't think it's going lower. I mean, there's been some bad headlines, and again yesterday, obviously, the Tencent and NetEase getting slammed on Chinese politics once again, and NetEase, NTES getting hit here once again on it as well. Baba getting pulled back. Baba pulling back. I kind of like the Bobster here in this area. I'm not saying I'm a buyer. I still have a little piece, but I kind of want to be a buyer. So I kind of like the pullback here this morning on Bobster.
All right. Now, one of that I want to go to is DraftKings here. They launched online sports betting in Arizona. That's kind of the news that you're going to get today. Also, I mean, right? NFL coming
kickoff.
Yep. Kickoff. Yes, I'm going to be having some drinks with the crowd, enjoying it. I know that there's going to be people doing some bets. There's going to be also the free promotions, right? I always talk about the promos. Look for the one that has the best promo that's giving you the most. That might be where the consumer goes today. So I'm going to be looking at the promos to give me a little bit of a sign where the kind of investors might go also. DKNG, Penn. We talked about the Genie recovery. We can talk a little bit about that,
Mitch.
But
we talked about buying that pullback. I wanted to buy that pullback yesterday. I didn't want to do it on the first day. Got to do them on the first day, I guess, because they only give you a little chance. GENI was down almost $2 at the open. It was a complete gift. It opened near and at the lows, basically, and went straight up from there like a rocket ship.
I don't know if it did open near the lows, Dennis, because I was looking at
it.
Yeah, the opening tick was 1937 and went down to 1910. So it didn't open right at the lows, but it opened down there.
Okay.
And they ripped that thing in the first 5 minutes. Then it had the little pullback after that, and it hasn't looked back, and it continues to go higher. That was the pullback. Mad at myself because I talked about buying the pullback on the show. Hopefully a few other people did. So now the guts to do it on the first day. You got to sometimes just say, hey, when you got a storied stock, it's getting hit on its earnings and the story is still intact, sometimes, that's the buying opportunity. I did it with Etsy and it paid off. It would have paid off with Genie 2, GENI. Mitch has brought us. This is Mitch's stock. I like it because Mitch likes it. And I like the thing behind the thing analysis. And I like the sports betting. I like the seasonality of the play. All the ducks were in a row to buy that pullback. It would have worked perfectly, except one, I didn't do it. Two, mainly I forgot about it.
I didn't think it opened that low. The old
I didn't know I did.
Yeah,
I didn't
look at the old whoops trade we talk about. You want to buy something or fade something on open. You buy 1937, you're not sure. Is it going to trade under 19? But if you could have been cat quick and just put a buy stop in there at 1937, when it came back up through that level, you're like, before you even card it up, it's 1950, 1960, 1970. So that's a little bit of a strategy. Mitch, just quick side note, suicide pool this week. I mean, is Tampa Bay too obvious? Is Dak gonna surprise people?
Yeah, I see that happening. Honestly, one of the things that I have always noticed is Tom Brady actually starts slow. He doesn't start fast. If you actually look into his season stats, you'll see that he does really, really great past week 6. So the reason I think that happens is, he's like a coach on the field, right? And so he understands defenses. And I think at first you don't know what defenses are how they're trying to attack you. Beginning of the season, you kind of learn how they're attacking you, and then you go and adapt. I think that's.
So who would you go with?
I'd have to go with Dak here. Dak is going to do great
to win outright.
I have to give it to the Cowboys tonight. A surprise. Reason why? Everyone's sleeping on Dak. Everyone thinks that his shoulder's hurt, and if he does what
it's his ankle. He hurt his ankle.
Both.
Did he hurt his shoulder too?
Yeah, he had a hurt shoulder for a little while. He wasn't able to throw for like 3 weeks. They're saying that he's whipping it again. He has the receivers to do it. He has the running back. He has the offensive line. Why not?
Okay. All right. We got another minute here. Anything you want to finish up with?
Yeah. Last one I want to bring up is Lucid Motors, because it did take a turn down after filling the gap. The question is, what's going to happen with this stock? Is it going to attack the lows? I know the warrants were called. That also hit it yesterday. So let's take a look at Lucid Motors right quick. LCID. Last one up here.
This has already had the rally. It had that day where, me and you, Mitch, were talking about 15. We never got down there. It only got down to 16.12, and it filled the gap perfectly. I mean, this is a gap fill trade to the T. We're talking about the gap down from the previous close, and I'm going back to the 31st for the new gap traders. The low was 1992. It opened way down at 16.12, so they had a huge gap to fill. Where do we go? I mean, Joel, this is so textbook. 1995, and then we double top at 2002. I don't like that at all, that now you've filled that gap entirely. So the gap fill trades off the board, and now you put in a double top right at the point of the gap fill trade. I think until you get above 20, the idea seller rallies and Lucid.
You quoted me exactly. We talked about this on at the close show with Mitch yesterday. I feel about that. I'd rather buy this thing at 20.05, right? I mean, you get the breakout there. Today's a big day for it. I mean, if you can hold, I mean, you're not exactly getting a running start. Like the average range on this thing, $1.25. You got a ways to go, but I'd keep an eye on 20. This is one that possible buy on string. So, all right, I'm going to hop over to Pre-Market Prep Plus. Got a bunch of symbols to cover over there. Mitch, I will let you know if I'm coming down to the headquarters today or tomorrow. And everyone have a good day. Let's see if the Spoos can stay green.
All right, that's going to do it for Joel. We also got Dennis getting on out of here. Dennis, go kill it. Another day, man.
Always. We're just trying to pay the bills, Mitch. We're just trying to pay the bills. So we will see you guys again tomorrow. I predict potential inside day, a little bit of chop fest, not chasing moves, although I don't mind that Peloton setup off that low that I talked about.
All right, we'll see what happens. Thank you, Dennis. We'll see you tomorrow. All right, guys. So before we get to Peter Tuckman, I want to talk about, yes, right here, guys, the full day of free education. If you're not checking this out, you definitely need to, guys. We're going to be doing a boot camp this weekend. Let me go ahead and put it up on the screen here. If you want to learn from zero to a hero, man, September 11th, starting at 9 a.m. Eastern all the way till 5. This is on a Saturday, so you guys come learn. Look at the speakers that we have. We got Tim Quast. We're going to have Anne-Marie. We got Chris Carpy, Mark that runs our education program. Neil's going to be there. You guys go learn at the boot camp. I'm going to play this little trailer, and then we'll bring on Peter. Let's go ahead and bring him on here. How we doing, Peter?
I'm all right, buddy boy. How you doing?
Hey, excited to have you on. You know, you're kind of like a hero around here, so it's good to have you here. I know that you've been seeing kind of a little bit of a weak start to our September. Are you thinking that, the seasonality is really coming into play? Normally September gives us a little bit of a pullback. Do you feel that's affecting the market right now?
I was joking. I made a little tape the other day talking about the Rosh Hashanah Yom Kippur trade, right? And that's one that classically has worked, where people sell on Rosh Hashanah, buy back on Yom Kippur. Whether that's what's happening here or not, we haven't seen the sell in May and go away be working lately either. So seasonality, yes, it is a factor. I don't think the playbook this year is going to be the same. I think it's a little bit of the Fed, the fear with the Fed. I think, Janet Yellen's talk yesterday about government defaulting, look, the market at this point, we've been trading at record highs through a lot of chop over the last week or so. And, we obviously need something to catalyze us on the way up or the way down. And I'm not clear we have that yet. So the market's kind of churning. It's kind of trying to get comfortable coming into the last quarter. There are, we had a week of storms. We've had, some just bad news generally, inflation, Afghanistan. I mean, these as individual entities don't really move a market, but when you put it all together and you get this sort of a perfect storm, you need people to wonder, am I really going to pay these valuations right now to get back into this corner? Do I wait and let the seasonality play out a little bit and see what's going on. I think that's kind of where we're at. There just seems each time we've seen any kind of a drastic sell-off, we haven't seen any drastic sell-off. But whenever we've seen any consolidation or a pullback, which I think is the best way to describe it, you've got crashes, you've got pullbacks, you've got consolidation and whatnot. Anything we've seen is nothing more than a bit of a pullback, and we find a bid in the market no matter what, whether it's on individual stocks. I know the guys before were talking about these reversals where you'll see a stock gap down but quickly bounce back up. It happens with crypto. It happens with the meme names. It's happening with the market and the spiders in general. Every day we've seen any kind of a pullback, we do see a bid step into the marketplace. So I think there are people there with shopping lists ready to buy things at any discount that comes in. And they're not really waiting around for the big discount because it just hasn't come.
I couldn't agree more. I know that a lot of people have been looking for that 10% correction in the SPY, but we got it into IWM, right? I mean, that could have been it itself, and now we're seeing that consolidation here. Now, one area and industry I'd love to ask you on is gambling stocks. This is an industry that's kind of relatively new. I'm seeing the growth coming into play, also seasonality now with the NFL coming out. How do you view this industry going into, let's say, 2022?
You know what? It's unfortunately not a space I know anything about. I'm not a sports gambler personally, and so I don't really follow the stocks, and I can't really say anything that intelligent on the sector, so I won't. But clearly it's we've seen things come in to the marketplace, new plays in so many different ways. And this is one of the biggest new names, right? You're seeing the David Portnoy story. You're seeing a lot of stocks that have come out, have been attractive. Most of the investment community are gamblers by nature, right? They do play the sports game. And so the legality of it, the legalization of it in so many states, and the fact that it's so accessible, and then there are public companies now that do it and track it, I think it's definitely a sector to keep your eyes on.
All right. So now one thing I want to get into here is you guys do run Wall Street Global Trading Academy. And one of the things that I've been seeing is, of course, day traders of last year starting to come into some battles and learning the market here. So what would you suggest for those traders that are out there that, went through a really bullish year last year and are now going through a little bit of a struggle in a choppy market?
I really appreciate the question because, yes, I do work for Wall Street Global Trading Academy. It is a course and a webinar and a class that teaches technical analysis. And clearly, you've got 40 million new people got into the market in March 2020. Everybody thought that, the market got back to even by August. It's done way double-digit growth since then, trading at record highs. Everyone who got in and bought at that point feels they've got diamond hands. But when markets start to do what they are doing right now, which is consolidation, which is grinding and moving, trying to find their balance, when you've got the meme stocks going wildly, vacuumed on the way up and way down, when you've got people following the internet as a robo advisor in so many ways, you're going to see pain, right? And when you see stocks go from 20 to 400 and back to 60, or you're seeing stocks go from 40, 60, 80 and back to 35, and we see it at Wall Street Global, people come to us in desperation saying, you know what, I thought this was get rich quick scheme. I really did well from March till now. And now I'm just getting beaten up. I'm trying to get back to even. I did the worst thing possible. I listened to the internet and hope is a strategy. And now I've spent the last month and a half trying to get back to even because I bought stocks with a FOMO mentality. Right. So I beg everyone to learn the tools of technical analysis, whether you learn it from Wall Street Global or anywhere else. There are a lot of good educators out there. I think obviously David Green is the best and one of the great teachers because teaching is not an easy thing to do. There are a lot of guys out there who know day trading and technical analysis, but being able to convey that information in a way that's accessible to a new trader, right, or somebody who is sort of not particularly humble, who's gotten beaten up and really are kind of licking their wounds and need someone to give them a little bit of a hug and mentor them and coach them. We do that to our students, where every Thursday, people who buy the course, we walk through the course with them. We do it live on Zoom. And there's nothing better than that. That is our secret sauce. That's our differentiator, where we get on with the students, because some people learn in different ways, right? And this is a hard game because you've got the psychology between your ears that's telling you this guy is good. I don't want to miss out. Look, everybody's buying these things. And that's the voice you can't be listening to with the discipline and consistency of a smart trader, right? That's the super part of this thing. That hope is not a strategy. The internet is not a strategy. Learning the tools and knowing it yourself on how and when to get into a stock on the long side or the short side, where the probability is in your favor, that you're going to win more times than you're going to lose, using risk management, stop orders. I know the boys before me talked about that, but guys, a stop order, every time you get into a trade, you have to have a plan to get out, right? And you got to start taking profits when it goes up. You've got to have trailing stops on the way up to never turn a winning trade into a losing trade. That is the premise of this business. Hit singles and doubles. You don't have to swing for the fences for a home run every time, because you may win once or twice, but eventually you're going to go to that well and you're going to get hurt. So consistency, discipline, risk management are the keys to this biz.
Hey, like I would say, like in baseball, you can't bat 200 and just hit home runs. So you got to hit those singles and doubles. And I definitely do think at the end of the day, it's all about process building, right? I mean, at the end of the day, your process might not be the same process that I'm using, but we got to build it up to the levels to trade how we want to continue, and also see the consistency, not only in the up waves like last year, but in the down waves where you need to control your risk and control your capital. I think that's what a lot of traders are going through, the struggle of learning right now.
Yep. That's the most important thing. That's what they're learning. I got to run to a dentist appointment. I'm sorry, buddy.
Hey,
but I really appreciate you asking me that question. People, please go check out our website. Check out Benzinga. They are the best. They've given us a great platform. We love them, endorse them all the time. But if you're interested in technical analysis, check it out. Today, actually, we're going to be doing a live webinar with Quant Data, who's an amazing unusual activity option quant aggregate guys at 12:30 on Zoom. You can go sign up for it on my page, David Green's, and on Quant Data. But learning it, and on Wall Street Global Trading Academy. So go check it out, everyone. Good to talk to you, buddy.
Peter. You have a great day. Take care. Yeah. All right, there you guys have it there. Peter talking about how you can really kind of change on over. I know there's a lot of traders out there that went through last year that are now struggling to understand how they can get profits in the market. Definitely start going into systems, learning from them, and how you can apply it. All right, let's go ahead and let's get into our crypto update today. I want to take a look at the crypto. What's going on out there? You guys hit the like. Let's go ahead and take a look. Out there, guys, let's go ahead and take a look here at the crypto markets, see what we're seeing moving. All right, let me just pull up my screen here. All right, looks like it's a green day here. BTC up about 1.2%, ETH 2.72. Solana is really the impressive one, up 28%. That was up yesterday also. So definitely, hey guys, check out SOL. Solana doing amazing. I definitely need to start paying attention more towards that one. Doge sitting at 1.9% up. XRP up 2.01%. I'm going to keep watching these to see if they keep moving, but definitely, I mean, really quickly, Solana has been moving pretty significantly. I'm going to keep an eye out on this one. And it's going and trading at $206 right now. It's something that it really impresses me because I've seen this one make big moves recently, and it's going to be on my watch. That's going to do it for our cryptocurrency watch this morning. Now, we'll let you guys know we got an action-packed day today. We're going to be getting into live trading next. So you guys smash the like. This will take you right to it. I'm going to be there. I'm going to try to knock out some good trades for us today. I also got my other kind of co-hosts, like always. I'll have Zunaid also in there and Ryan. So I'm super excited to get onto live trading. You guys hit the like, hit the share button below. Let everyone know pre-market prep is the best morning show. I want to see the likes go up here. Where are we at on the likes? 357. I need to get towards 600, guys. I need you guys supporting us. Let's go ahead and smash that like. If you guys appreciated today's show and also the interviews we went into talking about the ECB, we talked about GME, Lululemon's, RH earnings, and we're definitely going to take a look to see what happens in the gambling industry. Like always, you guys do us a favor, hit that like, hit the subscribe bell below, and up next, you got live trading. We'll see you there.
Bye.